Yeah, bro. All right.
I knew that spamming was going to be the trick. It would pop up and then I'd click it and it would disappear. It just kept doing it. Okay.
It's all good. It's all good. Well done for figuring it out, man. All right, let's get to it, bro. Let's get to it. So we got this wonderful looking chart in front of us, Jester. And I was saying what we should do is perhaps first just annotate all the different bits to it, right?
Yeah.
So just talk me through it. However you're ready, man. Just talk me through. Shall we start with your the left hand side of it, and then we'll move on to the right?
Yeah, that sounds great. Yeah.
So let's go. So obviously you've got here the open, high, low, close bars, right? So that's an
Correct.
easy one. I'm just going to annotate that. So that's your open. Oh shit. Open, high, low, close bars. Damn. Sorry about my. Whoa, my mouse is bugging out. That says OHLC bars, guys. That's what that shit says right there. And then just to talk me through the green line and the blue dotted line.
Let me see.
Uh, you there?
The what's that again? The blue and the green?
Yeah, that's right. So this is the blue and the green line.
Oh yeah, yeah. The green line that Price is following is it's a 20. First off, it's a 500 tick chart. That's what I usually like to use for entries. It moves quick, but not like insanely fast. So that's a 500 tick chart with a 20 EMA, which is the green, and then the blue one is the cumulative delta that's overlaid on top of the chart. Sometimes I like to see that. It gives you kind of like a really quick moving real time kind of a feel to it for the delta. Whereas if you have it in the bottom pane, it's so scrunched down that you can't really see those big swings as good, you know? So that's why I like to do that.
Cool.
And
What
then I,
was what was the gray? Sorry, I missed what the gray was.
um,
So I've got the blue line is cumulative delta. And then what was that greenish kind of line? Sorry,
oh yeah, that's the 20 EMA.
the 20 EMA. Great.
Yep,
Okay. So 500 tick chart.
yep.
Cumulative delta, 20 EMA. I am guessing on the right hand side is just standard volume profile and delta bars, right?
Yeah, exactly. That's for I believe that's for the visible range right there. So just to see like the most recent stuff. So in this case, it's only like a half hour, maybe 30 to 40 minutes maybe for this example. Yeah.
Okay, great. Okay, great. That's really helpful.
Yep.
Hold on, the screen just went. So let me just put the screen up again. Screen is
Sure.
back, guys. Screen is back. Okay, great. And then can you just explain the ask bid volume difference at the bottom? What is that?
Yeah, it's basically just another way to visualize the deltas without using the cumulative deltas. So, um, I typically find that those work a little bit better on a higher tick chart or like a 1 minute or 5 minute chart. So maybe like
Mm-hmm.
a 2000 tick. But I did just have it in. I happen to have it in this example, and it can be useful because whenever you have like an individual bar pulling back on the 500 tick, you'll see like this tiny little blip down on the red, as you can see, as it started moving up and they started forcing those shorts out. You can
Mm-hmm.
see like very weak selling, and the buying is much stronger. And that's so being able to see it from that perspective instead of just the deltas, it can kind of add like another angle, and it's pretty nice to see that. Yeah.
Great. So I don't know if you can see my screen. I've just like highlighted here where the bar went really negative on the R speed volume difference, right? Um, and that was actually at a point where price was a little bit peaking. Is that just because actually that was a bit of a trap for buyers, and it looks like actually as soon as price recovered a little bit, sellers came in quite heavy there.
Let me see. I can't see it very good on the phone, unfortunately. It's
Okay.
got it. Let me see if I can maximize it. It has it kind of okay. I got it a little bigger now. Let me see. Okay. Okay, can you say that again? I'm sorry, I was trying to figure this out.
That's
I
all
got
right.
it now.
So on this graph, if you look at where price is kind of like declining, right? It goes all the way down,
Yeah.
and then you get a slight little recovery before it dips once again. And
Oh yeah.
when that recovery happens, you get quite a sharp decrease on the ask bid volume difference bar. There's like a sharp drop here at the bottom. So I'm just asking you really, like when something like that happens, is that an indication to you that, oh, actually price recovered, but sellers really took that down further quite aggressively?
Yeah, actually seeing those spikes on delta or even on regular volume, it's often very valuable to spot a low. So if we, it's not so much about seeing it and then assuming we're going to bounce. It's about kind of like you say with look for those higher lows. You know, big part of what I look for. So
Mm.
once you see that, and then you see that price is able to recover off of that and go up a few points, then you know that that's a much better signal that that might have been a low when you see that really big flush like that, because that also kind of shows that they're absorbing a lot of that, whether it be like stop outs or people capitulating or whatever. So that's actually a really good signal when you see those big spikes. Yeah.
Yeah, nice. And actually, I think my favorite bit of the chart here is this area here, where actually you can see, man, my mouse has gone mad, where you can see that actually the delta coming through is really deep negative, but the price action isn't really following that delta at all. I've just made a big round circle towards the bottom of it. I'm not sure if you can see it, but that's a real
Yeah.
interesting kind of like you'd call that a divergence, right? Of between price and delta, where actually sellers are going in heavy here, but price is kind of stabilizing.
Exactly. Yeah. It's like
Okay.
the Wyckoff effort, no result. You know, they're putting in. There's a lot of effort uh, going from the sellers, but there's not really much result. You know, Wyckoff effort with no result. So it's a really classic good thing that works. Yeah,
Yeah, great. And if you
price
guys
should have
don't
been
know what,
tanking, but they're absorbing.
yeah, and if you guys don't know what Wyckoff is, then it's a huge recommendation from I guess anyone who knows the market auction theory stuff, right? To really go and read Wyckoff. That's Wyckoff.
Yeah,
And I'd really recommend that you guys understand the theories around Wyckoff's market distribution and how he kind of like sees the price action, because it's brilliant. Okay, great.
yeah, really good.
So we've kind of understood the left-hand side of the chart now. Let's move on to the right. And the right, I think, is where people kind of get fearful because it's the DOM. And the DOM moves so fast
Yeah,
in the real market that actually it's really hard. And if you're learning the DOM, on Sierra charts, you can replay the DOM. And I'd really recommend people go onto Sierra charts, slow down the replay speed, and actually just watch the DOM for a good few hours and make notes around where price did something interesting for you. But yeah, Jess, to take us through column by column, bro, what are we looking at here?
yeah. The very left column of the DOM, that's the session volume profile. It should be the RTH. Usually that's what I use on the DOM. And the next one over is the on Sierra. They call it the current trades column. I think on Jigsaw it's the recent trades, I believe. And
So that is
so
showing us where trades have come in.
yeah, and you can reset it, so that's why it's not showing tons of orders above and below that. I had like reset it right as it broke down into that little volume pocket area, and that was one of the parts for this example because you wanted to see some absorption. So there's kind of
Mm.
like a, if we look right at 1150, 45 1150, there's like a little low volume node, and then it pops down, and you see like this little high volume node with a low volume taper below, and that's a really good thing to see on the DOM. kind of like one of the main things I like to see on the DOM. I don't really care about like every little price tick or movement on the DOM personally, but seeing something like it's almost like a footprint that you can reset. That's kind of what I think about the DOM. It's like a real time footprint, so we can see those little volume nodes there, showing like when we broke back above that volume node above 1150, it's showing micro level or short term acceptance back above that, and so we can kind of like lean against that for longs, depending on the context. I think the context here is pretty solid. I'd maybe let me see how far it went up. Yeah, so you could wait for a pullback maybe and not like chase right where it's at, because it is a little high. But and then we have the pulling and stacking right to the right of price, where we see like the blue columns all stacked up, or the blue rows of stacking and pulling. And we were going to get into that later, but this one shows an example as well. They're stacking behind price as they're blasting it back up through 1150. So whenever it's stacking behind, that's often a good indication, but not always that that's the right side to be on. It kind of depends on the context though, because they can shove it back down, and there's like we can see the offers above. It's like much weaker. It's like they're pulling offers, as far as like the pulling and stacking goes. There is liquidity up there, but they're not like adding to it. They're not trying to like stuff the move or anything like that. And then the next one, we see like the buy and sell columns that just shows the resting orders liquidity, and in between those is the recent trades column, which is what they call it on Sierra. On trying to remember on Jigsaw, it's I feel like they do it almost opposite on Jigsaw, so it might be like current trades on Jigsaw, something like that. I might be wrong.
Let me just try and catch up a little bit here, because I think I annotated it a little bit wrong here. So in terms of the pulling and the stacking, right?
Yep.
I'm just trying to figure out where I'm looking. So is that this area here, Jester, where you've got like I guess the top of the blue column is 44, and then you've got 111 down by it. So that's kind of showing you how the buys are changing. So it's 47 right now. It was 44. It's 116 right now. It was 111. Is that right? Am I reading that right?
Yeah, that's the stacking. Yep.
Okay. And then up top here, you've got some more that are just higher up, which is again, I guess, just the changes in terms of the asks above. Is that right?
Yeah, that shows how much they added. So the spot where you showed 111, there might have been like a little bit still there, or there might have been some there, but the last time they added like, I don't know exactly how they're refreshing it in Sierra, but it usually just kind of sticks until they pull it again.
Nice.
I noticed.
Okay. Yeah, that's fine. That
so
makes
maybe
sense.
they might have added like a few lots, and then we went up like a couple ticks, and maybe they added like a bunch more or something like that.
Sure.
So
and then sorry, go on.
Oh no, you're good. Go ahead.
So then you're talking about this blue and red column at the end, right? So this red one right at the end and the blue one just before it. Mike, I'm guessing this is still pulling and stacking, right? Is that still showing the pulling and stacking numbers? Yes.
Oh, that's the complete total of the resting liquidity. That's just the buy and sell column. So it just has the so like let's say they added 100, but it shows like it could show as much as like 150, or it could show like 100 on the pulling and stacking. They added 100 extra lots, but it might show like 200 lots sitting on the bid or something on the resting liquidity, and that's like every single lot that's sitting there. They count them all. Yeah.
Great. And then this little section in the middle, this is a bit that I don't quite know. What's this bit here, Jester?
Yeah, that's the recent trades column. The difference between that one and the current trades that was on the left is that you see where it was like the blue and red with the volume node we were talking about.
Yep.
That just shows the cumulative volume that's absorbed until you reset it again. This one shows all of the very recent actions. So this is more of like a real time type of uh, view on the market orders coming in to the market. So I have it set for like every 2.5 seconds, I think.
Oh
Uh,
wow.
so it refreshes every like 2,500 milliseconds. So if it trades at a price and then it goes back down and goes back up to that price 5 seconds later, it completely deletes the prior data that was showing there, and it only shows what's being transacted right now in real time. That way you're always seeing, like, it's really good for seeing kind of like, are they absorbing here or are they kind of giving it up or whatever. And that's what that column is good for.
Well,
And I would say, go ahead, I'm sorry.
that sounds really powerful, actually. So that's
Oh,
almost like a footprint within your DOM, almost, right? Because it's showing you literally where the orders are coming through.
yeah, it's like a footprint that doesn't aggregate the data, because the footprint, it keeps on adding and stacking it on top of each other. But there is a little bit of an element to the footprint with this, because the footprint, it keeps on splicing the data every time it goes to a new bar. So in a
Mm-hmm.
sense, it does kind of show you that. But this is like really, granular. But like you said, it is very similar to a footprint, though. Yeah,
Yeah,
a little
I love
different
that.
than the volume profile. Yeah, it's really useful though. I'd say the pulling and the stacking in that column right there are like kind of like the only thing I care about on the DOM right now. Like the other stuff
Yeah,
is nice sometimes, but that's like by far, in my opinion, the most useful thing. Like I'll just
yeah,
glance at it sometimes when we write at a key level, and you'll see like right in the moment, real time, you can see like 400, 500, 600 lots absorbing, and that's not normal. Usually you're pushing through a level on like 100 lots or less, or maybe 200. So when you see that, that can be a powerful sign. And then you can look for them to kind of like flush that out, which we can get into later. So you don't just enter immediately. It depends on the context.
No, I like that. And actually, that's really, as you said there, when you're seeing an aggressive move downwards or upwards, um, when the numbers remain the same, but price suddenly begins to stay where it's at, that's when you
Yeah.
start paying attention, right? And so that's a really interesting way of showing that. So there's loads of different ways that you can see that. BG,
Yeah.
who's often in the futures chat, BG has these little circles that kind of signify the ask size and the bid size, and he's looking for that change in those circles when we go through a certain phase of price discovery. And so that's a really interesting way of looking at it. All right. So I think I've got
Yep.
a really good idea of what you're kind of looking at there. Before we move on to the next slide and kind of like talk through that, has anyone got any questions from the audience? You can just pop your questions into the chat, and we can pick them apart from there if you've got any questions. But if you don't, I think I've got a really good understanding of what's going on in those charts. But I'm quite at home with order flow and with the DOM and the footprints at the moment. So if you're not and you've still got some questions left, then now's your time, or just shut the fuck up. So people asking which software it is. I think this is Sierra. Is that right, Jester?
Yeah, that's Sierra. Exactly. Yep.
So Sierra charts. There's a channel
That's
for
my
Sierra
favorite.
charts. Yeah, mine too. If you want to learn a little bit more about Sierra charts, there's a channel right at the bottom in the education section. Is the blue delta line available on TradingView? I couldn't tell you, Ish. You're going to have to check. Cumulative delta lines are pretty straightforward, though. So I would be very surprised if TradingView did not have cumulative delta. Can we do this on NinjaTrader? Two of you are asking that question. I do not know. Do you know, Jester? There'll be some NinjaTrader people out there who will know.
Uh, NinjaTrader has, yeah, they have deltas, they have footprints, they have all of the in volume profiles. That they have all the um, order flow stuff, but it is like a separate package. I've used a lot of different platforms, and I personally like Sierra the most. But you can do pretty much most of this stuff on uh, NinjaTrader and Jigsaw as well. And then to answer the other person about the trading view, they finally added cumulative deltas. I think it was earlier this year, but I don't know if they have it as an overlay. I only the only place I've seen that is on Sierra, so I don't know of any other area or platform that has that.
All right. Okay, guys. So we're going to move on to the next slide then. Thank you for that, Jester. Let's see what you got next.
Yeah.
So this is a bit of a book map kind of thing. Yeah, I'll let you talk through it. So you can see here you're kind of using the same bars, but you've got these lines going across. And I think most of us will know what this is, but I'm kind of pitching this as people who want to kind of like get their foot in the door. So just talk us through, Jester, what those kind of pixelated areas mean to you.
Yeah, so it just shows areas of really high resting liquidity where they. So if it's dark and then all of a sudden it's like bright blue or bright red, it means that they added a lot of liquidity there. It might be a spot they want to absorb at. It might be a spoof, or it might be a spot that they might just like pull it. But what was I gonna say? Take profits. That was the other one I was gonna say. It might just be that they want to take profits there, And this is something that our buddy Louis DePayne is big on, and I'm not nearly as good as him, like with this. So I'm kind of limited on how much I'm able to use this, but he's a genius at it. But and also I'll add that the way that it's thought of or taught normally, like I've seen on FinTwit and everywhere, is that we have these big orders and price can't go through it, or price can't do this at it, and it's a brick wall. It's almost the opposite of that. Oftentimes the market is seeking liquidity. It's trying to run the machine. It's trying to fuel the machine. It's not just trying to go there and just immediately die when it gets there. It can, but that's typically going to happen at like a support and resistance level, which is why I'm so big on using support and resistance first and foremost, and then adding order flow on top of that, so to confirm the action. So, but on this example, we went down to roughly 05 area. Notice how...
Before you move on from there, Jester, I just want to unpick what you said, because you said something really powerful there, and I just want to make sure everyone's understood that before we move on to actually how this chart works, because I can see why you chose this chart, because it's really interesting for resting liquidity. But what Jester just said there is like, and he said it brilliantly. He said that liquidity is what fuels the market, and if you're a market maker, or if you're someone who is looking to get filled on 500 to 1,000 contracts, you need to take price somewhere where you know that people are sitting there with their contracts. And so price doesn't just go up and down randomly. Price goes, and I said this in my episode last week, price goes from liquidity pocket to liquidity pocket. And it's not going there just so people can sell off. Quite often it's going there because there's a purpose there, and then it's going to go to its next destination afterwards. And so when you can see where the liquidity is, you can kind of begin to see the story that price is telling you. So the other day, for example, I can't remember when this was, guys, I'm sure you will remind me, but the other day there was a huge bid on the DOM, somewhere really low down. There was a huge bid on the DOM, and someone was just sitting there with liquidity, and they were sitting there the whole damn day. And it took price the whole day, literally. It took price about 5 hours to make its way through all of the resting orders in order to get to that big pocket of liquidity at the bottom. And then when it got there, it just went. It just completely rocketed after that. And that's an extreme example, but it does happen. And so what Jester's saying is, like, knowing where the liquidity is almost like knowing the most likely direction that price is headed towards. And of course, you can get spoofed. Of course, some of these orders can be fake. In my experience, Jester, I have found that most of the spoofing happens very close to the bid and ask. It doesn't happen miles away. And when you're looking at something miles away, quite often, if it stays there, that's there for a reason. I don't know if you found that.
Oh, I found the exact same thing. Yeah,
Mm.
exactly. It's brilliant. It's it will like go down there. Um, yeah, I tried not to cherry pick these examples. I just wanted to let everyone know that. Like, this is literally the other day on Thursday. So this is like a very large chunk of the RTH session right here. I think this is maybe like a 2000 tick chart or something, or a 1000.
Mm-hmm.
And so it's like the market was kind of chopping around after the open up there. It went up and started chopping. And then it sold off down right into that '05 when they started stacking down there. They're showing kind of like interest. And sometimes it'll front run the move. Like, it didn't hit it. And if you notice closely, they pulled their some of the orders, not all of them. They pulled them right when it got near it, and then it blasted off, and then it started chasing those higher levels. And then it would like eat through some of those orders, go to the next, and then it eventually, when it hit 40, which was really interesting, is it was like almost to the tick. I think it maybe went like one tick higher. They kept on stacking right there, and it just sent price way down like 20 plus points. So that was really interesting.
Yeah, and that's something that I've been trying to figure out myself. Just is like quite often when you see these huge liquidity pools, like the one that you've said at 505 that I've drawn like this leftward facing penis on accidentally. But when you start seeing liquidity down there, it doesn't always hit, right? It goes really close, and then boom,
Yeah,
they turn it around. And I
yeah,
can't quite figure out why that's the case. Um, but it does happen again and again. You will see that actually sometimes they'll knife through it and then pull it up, and sometimes they'll
yeah,
just skim around it. And so it's a really interesting point to watch that wherever you've got these liquidity pockets, where it's bright on Jester's one, on mine it just shows you a really big bar on the DOM. But wherever you've got those, it's really interesting to like just pay attention to price, and having a resting order around there with some risk associated with it, obviously, is often how I play it, and I can find myself getting filled on T1s quite quickly, when you're looking at those pockets of liquidity. Yeah, no, this is a really nice setup, and you say you didn't cherry pick this, but it's actually quite a good one here. I always listen to what Barry's got to say on these kinds of things. So Barry says the ones you got to watch is when the new level appears above and the existing band about 10 points above price, or the opposite on the bid. That's the ones that act as magnets. Yeah, that's really interesting, Barry. So
yeah,
when a new level appears suddenly, and someone wants to get filled quite urgently, right? Somebody wants in on the market, either because they want to take those shares higher and sell them, or because they want to fill up a little bit lower beforehand. I find though, Barry, I don't know about you, Barry, but I find that whenever those things come in quite quickly, I wait, because I don't know if they're spoofing. I don't know if it's just an advertised order that they're trying to fool everyone looking at the DOM with, which does happen quite a lot as well. All right, Jester, anything else on this that you want to talk through? Jester, are you there? Oh, we were doing so well, Jester. Come on. As you said, the spoofs are usually a lot closer to the price. Barry, you mean like 10 points away? So you're looking at something that's within a mid kind of range of achievable, rather than just being right on the bid or the ask, yeah? I bet you Jester's battery died or some shit.
Oh, I'm here. Can you hear me?
Oh, there you are, bro. Hey, hello. Yes, I'm here, bro. I'm here. All right.
Yeah,
I was just asking you. I was just
okay.
asking you, Jester. Is
Go ahead.
it? Sorry, man. I was just asking you if there was anything else on this chart you wanted to talk through before we moved on.
Oh yeah, just to add, I barely like touched the screen, and Discord took me out of the group for like a split second. So no, my battery is plenty fine. Discord's crazy. Um, yeah, Barry is like really advanced with this stuff. It's incredible. Like him and P Funk and all this stuff. It's crazy. I love his berries liquidity chart that he has with like the purple on the bid and the orange on the ask. I was thinking of copying that because the colors and all, it looks real nice. A lot better than mine, in my opinion. But
Yeah,
yeah, the last.
Sorry, go on.
Yeah, I was just gonna say I love your that you brought up the liquidity pockets. You know, because that's kind of like exactly what the market does. Is it's constantly just going from liquidity pocket to liquidity pocket. It goes there. One side gets out of their orders, fills up on the other side or whatever, and then it either we see continuation down or up to the next area, and then it just happens again. You know, accumulation, distribution, and so it's just from liquidity pocket to liquidity pocket, and that's kind of like the big underlying framework of the market. You know, going from like, and another way to say it is, it's going from value to value area. You know, it builds value, and then it breaks out of it, imbalance to balance. Yeah.
Yeah, great. And you're right, Barry is really good on this. Barry always bigs up BG. I mean, both of you put together, Barry, we're just all so grateful to have you in this server because you add so much context to everything. Me and Barry are actually having a chat tomorrow. And then I'm hoping, guys, that
Wow.
we can get Barry up onto the stage in the coming week or so. But whenever that's good for you, Barry, obviously, because that will also be pretty awesome. All right, I'm going to move on, but I'm going to give you guys an opportunity to ask questions. So any questions on this slide before we move on? All right, good. So I'm hoping that just means Jester has explained that really well. So thank you, Jester. All right, let's move on. Oh, we've got another one, Jester. Do you want to talk through this one for a specific reason?
Oh yeah, the other one. Let me see here. I'm like, as you're moving them, I'm opening them on the computer so I can look at them because I can't open them on the computer on Discord. It'll boot me off. Okay, so let's see. Yeah, it went up into that really major 4610 level. They started stacking heavy up there, and right when it got there, kind of like the other one at 05 below, it like front ran it by like a few ticks, and then it just went down. And they started stacking, or they started putting their orders lower down near. Looks like I think it was around 80, 45, 80, 45, 79 type area. And price kind of like consolidated above it. And then it went right down. It bounced right before hitting it. And then it went down and it kind of like swept it. And you mentioned that earlier. And I've noticed that very often. If run it and just keep on going, it'll come back and it'll sweep it. And then it'll bounce back up and reclaim it and keep. It almost ends up being like a support and resistance level that's like real specific. And it's kind of crazy how it works sometimes. It doesn't always do it, but sometimes.
Yeah, no, and that's kind of like adding more context to what we were saying earlier, right? So I really like the way you've got it lit up in the way that you have. It just gives it a really good attention to where it should be doing. I've got a question from Katka. He says, how much weighting should be put on historical support SD? I don't know what SD is. Supply and demand. Sorry, yes. How much historical supply and demand versus order flow? Are they equally important? So I'll have a go at answering this first. There are no silly questions, bro. So I ask whatever questions you want, guys. That's fine. Don't be shy about asking questions. So for me, Kapka, supply and demand and support and resistance, one and the same thing. They are the first thing I will look at for my chart in the morning. So I'm going to look at, okay, where is the historic, the walnut levels that I put out? Where is the historic stuff that counts for this current level of price? The order flow for me, Katka, is kind of showing me what's being respected and not being respected in terms of my lines on my charts. whether that's the VWAP bands or whether that's my walnut levels. The order flow for me is like an indicator of respect by price. Is the market respecting this line, or is the market actually not respecting this line, and we're just cutting through it? Because as much as you can draw 1,000 lines on your charts, not all of them are going to hit. Okay, and I was having this conversation with somebody the other day. It was BG and me were talking, and you know how some people, when they make their plans, they say, "All right, guys, tomorrow I'm looking for price to go to 510, and then from 510 I'm going to be interested." I don't really trade like that. I don't really predefine a line of interest. I let the order flow dictate the line of interest to me. Jester, I don't know if you want to come in on that at all in terms of what I've just said or the question.
No, yeah, I was actually going to say the same thing. Totally agree. Support and resistance, supply and demand, it's like the same thing. One's a zone, one's a level. I use both of them. I mean, they're both really good. I like the specificity of lines when applicable and possible. It's kind of like the walnut levels, because it gives you like a really clear line in the sand. Whereas the other ones, sometimes it can get you, things get a little clunky, and maybe it's accepting above and you think it's not because you have this wide zone or something. So that's one of the benefits of the key levels. And then also what you were saying about you don't want to view it as an exact turning point, like it hit the level and now I'm just going to go long because it's going to bounce and go up 1,000,000 points. You want to kind of see it gain acceptance. You want to see like whatever your patterns may be, like maybe you want to see it consolidate for a couple minutes for a little bit, and then it flushes out longs to get them out, and then it pops back up and reclaims. That's like one of my favorite patterns. And like you could just do that,
Yeah, no, totally agree. And that flushing out is really important. I tried to write sweep on the slideshow, but it kind of fuck knows what it wrote. It didn't write sweep. But why are they sweeping there is a really interesting question. They are sweeping there because they can tell that there are longs sitting here and there are more bids sitting below. And the truth is, guys, is that they don't want you to have the shares to go long with. They want the shares to go long with. Okay, so they're going to sweep you out of your shares. They're going to try and get the cheap shares from you using your stops in order to go long. And so when we talk about them flushing, they're flushing you out, but they're kind of positioning themselves in with those shares. And it's really important to remember the market dynamics like that. Of actually, there's a big buyer somewhere, and you need to. I think of the market as like a composite person, just like one dude who's kind of running the market. And it's a really interesting way to look at that, because when you begin to look at the market like one dude who's running everything, you can tell why he swept there. He swept there because he wants those shares to go higher with. He doesn't want you guys to have the shares to go higher with. Another question here. High volume nodes, usually where the most liquidity seems to be. Not necessarily paper. So a high volume node is where liquidity existed historically. If you're looking at the order flow and you're looking at, so if you just look at, for example, this picture here, where I've drawn that big rectangle around 4580, that's not a high volume node. That's where the largest pocket of liquidity exists at the moment. And so, yeah, historically, high volume nodes are where liquidity was the most, yes. And liquidity zones can be strong support. Yes, they can. I would say that's probably right. Liquidity zones are areas of support and resistance intraday as the action is happening. Okay, I'm just conscious of time, guys. We've been here for an hour. I'm going to move on. FigJam, I'll give that a read in a minute. We're just going to move to the next chart, if that's okay. So let's see what we got next. Okay, Jester. So next up, then, can I just ask you, Jester, on every chart that we've looked at the moment, you've got the OHLC bars. Is that all you use? You use the OHLC bars?
No, actually, I don't. That's the least. That's what I use the least, and I actually noticed that I did that, and I was like, oh man, I got to send him some candlestick charts, because that's mainly what I use, but we're talking about order flow. So that's why I sent you those 2 candlestick ones at the end. But the reason I'd sent so many of the high-low bars is for entry charts or any kind of fast-moving chart where I want to see deltas really quick. I do use the high-low bars because they take away a lot of. You might start. Hello. I'm on a call. Yeah, sorry. Okay. Yeah. Sorry about that.
No, it's cool, bro.
Yes. So the high-low bars are. They kind of like take away your focus from the bar. You're not like, oh, it's a green or a blue bar, we're going up. And so it just keeps you looking at the structure. So on the you'll see like higher lows and higher highs, like on the 500 tick chart. And that can be really valuable. So you don't really want to see every little blue and every little red. It's going to whipsaw you around. You just want to see kind of the structure. But then when I'm looking at like 5 minute and 15 minute, 1 hour, 4 hour, which are like I'm real big on those, then I do actually want to see the color and the candlestick and all. And that's where I'm usually looking. I like to, you know, the foundation of trading, in my opinion, and what I like to pay attention to the most is like getting those support and resistance levels, real basic stuff. You know, where's the buyers and sellers showing up? And where do I think they're going to defend at? And then I watch the order flow in those key areas. I'm not going to try to like buy in the middle between like two support and resistance levels or something like that. If it like bounced off the one above and it's going towards the one below, I might take a pullback scalp to the one below, but I'm not just going to like go long right there and like pray it blasts through the one above. You know, that's like really high risk play right there.
Yeah, that's right. So I call those areas no man's land. So
Yeah,
if prices between my lines, then I'm not really going to be getting involved until I've figured out what's the direction next.
exactly. Yeah,
Yeah, and again,
100% agreed.
if you're looking at Wyckoff, then he talks about price discovery and balance, and you can take that onto an intraday kind of like idea of like where price is remaining, where price is like accumulating or distributing. You've kind of got a small area of balance, and then it goes from balance to discovery back to balance. And so when price is moving from one area to the other, that's price discovery, where price is discovering the next area where it's going to find balance. And you never take a position during discovery. You're kind of taking a position during balance, whilst price is moving around in a given area, so that you can kind of like make a decision about, okay, I think the next area of discovery is going to be above or below. But you're not taking positions during discovery. You're taking positions during that balance of price. Okay, so Jester, this chart here, I'm guessing the columns are the same as what we saw before, but you've also got your level 2 up on the side, on the far right. Is that right?
Yeah, this was the time and sells examples so that we could see like the large orders or like tons of aggression hitting the market in a short amount of time. And I also wanted to share this because this was actually, I had it annotated on Twitter, but I shared this was actually a trade that I took here, and it's a little bit unconventional. Like, I'm not trying to chase price, but I had a read on the market, and there was an insane amount of selling coming in. So there's like overwhelming amount of supply coming in. And if we look closely up near 73, roughly 72, there was like, near like 72, price was kind of like consolidating on the micro level. It wasn't very long at all. I think this was actually a 10-second chart, if I recall correctly. I like 10-second and 500 tick for like entries, and 5-second. They're all kind of like relatively similar. But it broke down below that little micro consolidation. And it really just looked like it wasn't going to bounce back up because of the order flow coming in, which like insanely crazy. And they were stacking on the offer, as we can see on the DOM there, the chart DOM. There's like 1936 stacked versus like 61 on the bid. The bid was like really thin. The offer was super heavy. And we can see the volume pushing down as well. And so it was just and it ended up running like, I think like 12 points more or something like that, and I ended up exiting pretty close to the bottom. That's not always the case at all. I'm often exiting way too early or quite early, as many traders we all do. But you don't want to try to catch like the exact bottom tick. You know what I mean? So I exited when the like the tape isn't the thing that I use very often, but in this situation it was. And when we got down, you could see heavy buying showing up. And so now there's demand showing up and they're starting to take profits on those shorts. And we went really high. And I can't even remember, it was maybe like 20, 30 points that day. This was a while back. This was like last month. This was almost 2 months ago, I think. June, I think. Yeah.
Yeah, and let me ask you a question, Jester. So on your time in sales there on the tape,
Yeah.
there's some pretty big numbers there, right? 51, 118, 45, 35, 99. Some really, really hefty numbers there.
Yeah.
Are you filtering those for only trades above a certain amount?
Yeah. It's filtering for 20 or higher. Yeah, exactly.
Right.
Yeah. I'm not really big on seeing like every little trade. Some people do it, but I can't really. I've tried it, and occasionally I'll glance at it, but I like to see the filtered. If there's something like really major going on, I like to see that.
Yeah, Barry's got a question. Barry's asking, is 500
Yep.
tick the same as 500 trades on Sierra? I don't know the answer to that because I don't use tick charts, so I've got no idea.
Yeah. It's the same
Did
thing.
it?
Yep.
Okay. Yeah, it is the same thing, Barry. Fine. Okay. I mean, that's a really good example, Jester, of like stacking above the ask, of sellers coming in. You can see the price action on the way up is actually quite poor anyway, right? And so not a lot of people are believing the move that's coming up. And then you just see the
Good
tape
point.
kind of come through quite thick with the cells. And you can kind of begin to see direction here. Anyone got a question about this slide, guys, before we move on? Still a lot of you hanging around. I appreciate that. I know we're over an hour in now, but I appreciate you guys hanging around. I hope you're making notes. The session is recorded, so if you ever want to revisit some of this stuff, can you discuss sweeps? Yeah, we actually spoke about sweeps, didn't we, Jester? I don't know if that comes up on the next slide or not, but the next slide is a footprint, so we can talk sweeps on the footprint, right? Jester, just introduce us to what we're looking at here.
Okay. Let's see. I'm gonna pull it up on the computer if I can find it. Okay. Oh wait. Okay. So I'll have to just use the one on the one that you shared. I think I don't. Yeah, I forgot to save this one. Oh wait, no. Okay, I found it. Okay. All right, let me see. Yeah, this was actually a pulling and stacking example. Yeah. But there's actually a lot going on here besides just the pulling and stacking. So we ran up. This was.
Sorry, I've just got to pop out for 2 minutes, so I'm just going to leave you to talk through it with everyone. And if you want to help out with
Yeah.
any questions along the way, that's fine too. 2 minutes.
Yeah, take your time, no problem. Yeah. All right, so this was yesterday actually. So this is not. I was trying not to cherry pick. I went for really recent stuff. Some of them from today and yesterday. So we ran up on the session, and I can't remember. I think there was resistance somewhere up in the. Let me see here. 50s or 60s. Let me see. I might have to open TradingView real quick actually to get some context on this. Trying to see where this move happened at. Oh, okay. This was okay. There was like a big sell-off. We saw continuation back to the upside. I was confused because I remember us having going up to 60 roughly yesterday and then having a huge sell-off. So that kind of threw me off. I didn't remember this example. But yeah, we went up to this little 50 area. And let's see. Yeah, if we look at the footprint though, we can see the little blue bars here. That shows that we were absorbing right when we got up near 50 right there. And so it would go, and this is a 5-minute footprint, and it kept on stair stepping slightly higher, but there wasn't a lot of juice behind it. It went up and it absorbed, and then on that last bar that I'm showing at 950, it went up, and it was a very short amount of time that it spent there, and it absorbed. We those two blues right there, it shows absorption of aggressive buyers by passive sellers. They absorbed it and it went right back down. It was almost like, auction theory where it's saying the buyers don't want to take it higher, the buyers don't want higher prices. And the sellers were starting to show a little aggression right off of that, and they sent it down, and you can see like a few ticks below it, like 4 ticks below the red with the little high volume node right there. They were showing intent to push it lower. They blasted through that because there were some buyers absorbing that right there. And they blasted down below that. And then not long, and they also started stacking on the offer. This was like a stacking example. So they absorbed the move up near the high, and then they started absorbing or stacking behind the offer to absorb any buyers on the way down, and then it started selling off. I think it was a pretty quick sell-off from what I remember. Let me
Yeah,
see
it's
here.
interesting here. Look how thin the bid is as well, right? So you can see that the bid is really quite thin in comparison. But
Yeah,
also the pulling stacking numbers on the bid are quite obvious. So you can immediately see that actually people are starting to shit themselves. People don't want to buy up here anymore. They don't think there's going to be a pullback. They actually think it's going to be a sell-off.
yeah, that's exactly what I was saying. Is that the auction is telling us that buyers don't want higher prices. They realized right there. It was like this little moment. I watched it in replay mode, and it was really good actually. Right as they went up to 50, it's like it paused there, and they were like, it's almost like you could see the buyers like, oh, I'm getting trapped here, and they just like threw in the towel. They're like, okay, we need to auction lower, flush out some of this inventory because this has been like a really impulsive move, and we still haven't even flushed out all this long inventory. And they were like, screw this, I'm out. And so a lot of the selling that's coming in is actually from them exiting as well. All these buyers who exited late are going to be shooting price down. We're going to get profit taking from the big guys when they caught that huge wick on the 15-minute that happened at, let me see, I'm on TradingView now. It happened at like 8:30, an hour before the open, and they rocketed it up, which that's a really good sign to see. It's like
Mm,
that was like a Wyckoff spring. Wyckoff spring,
mm.
very powerful, really good stuff. Um, we saw that, then we ran into that little spot of absorption there, and we had to auction lower to get that inventory out. Yeah,
Yeah,
and
great.
like you were
And I'll tell
saying,
you,
they're pulling bids heavily. That's all I was going to add. Sorry.
that's
Yeah,
okay.
see how
Yeah.
they're pulling the bids there? Crazy.
Yeah, yeah, exactly that. And when you're seeing it in real time, as long as you know what you're looking at, like it does give you a very clear indication of what's possible next. For me, this is really interesting as well. Look at those. Look at that volume profile right there at the top. Can you see how that's kind of like showing a huge amount of volume coming in here? Whenever you see volume like that, you want to see what you don't want to see is price remaining where it is, because people are trying to move this. Either sellers are trying to move it or buyers are trying to move it. And if it's at the top of a move like this, then it's probably buyers trying to move it, right? So all of that put together, the pulling and the stacking, the volume profile, the delta. That's a really clean footprint you've got there, Jester. I really like it. It's I love the way that you have highlighted only certain deltas where you've actually got an interest. Can I ask you a question about this? Why
Yeah.
is I think I know the answer, but I'm actually asking because I'm sure other people will be wondering. I'm not sure if you can see my annotations, but if we look at the final bar on your image, you can see that the red delta on this bar is the 520,227 kind of price action, right? That's where we've got a red delta across the middle of the bar.
Yeah.
The bar above that is actually a bigger bar. It's 413 against 471. Okay. Now I think the reason that's not coloured in the 413, the 471 one is because there's kind of like an evening out of buyers and sellers there. They've kind of like balanced each other out. Whereas the one that's highlighted red, that's where the bid has actually got more volume than the ask, which is why it's red. Is that right, Jester?
Yeah, that's exactly right. Yeah, I have it showing like the main spots where there's like a bigger, a more intense delta imbalance. Like there's very heavy selling on that red one, but not as heavy on the one above. Exactly.
Great. The Fig Jam's asking about the highlighted areas on the tape, Fig. These, I think, are trades that happened either below the ask or above, sorry, below the bid or above the ask. Am I right there,
Yeah,
Jester? So those
that's right.
when you
Yeah.
when you're showing the time and sales, you're just highlighting anomalies where people have gone so aggressively that they've actually gone above the ask or below the bid.
Yeah, exactly. I should have actually touched on that. That's one of the more valuable parts of the tape, in my opinion. When you see a lot of above or below ask, it's basically just showing that price is knifing through levels more easily, and that side is very often the one that's in control. So
Yeah, someone wants
sometimes
to.
you go ahead.
I was just saying, someone just wants to get in position quick.
Yeah, exactly. I mean, they want to get in quick, and it's just blasting through. It's a good signal. Yeah.
Great. Okay, fine. So I'm going to move on from the footprint chart that we've got here. Has anyone got any questions? I see Barry typing. Has anyone got any questions before we move on? All right, I'm going to take that as a no, guys, because Jester's explained that really well. So thank you, Jester. And then we've got a bit of TPO, and we've got we've got a different type of footprint in the middle. So just talk us through this, Jester. What are we looking at with the time price stuff?
Yeah. So on the left we have it's a market profile with a volume profile overlaid on top of it. And it shows the single prints on there. I didn't even add that. That was like you can add that in Sierra. It automatically points that out. So, but in the middle one was the main thing we were wanted to show was the imbalance. So let me actually pull this up here.
So
Bottom, let me,
imbalance is basically the sweeps that someone was asking about a moment ago. I think it was Fig Jam. He was asking about sweeps. So for me, this is one of the most singularly important things that I look at when price is in discovery. I'm looking at areas of sweeps, and we'll kind of talk about why in a moment.
oh yeah, it's really powerful. And I'll quickly touch on that, above ask, below, or whatever that is. Um, it doesn't necessarily mean that that side's in control, but it's almost like the opposite of effort, no result for Wyckoff. They're actually getting rewarded for their efforts, and it's blasting through levels like crazy. But there is a situation where it will go, you'll see an above or an below, and then it'll just pause and start getting absorbed right past that. And so it actually takes on the opposite effect. So if there's like heavy selling and you're seeing them go below the bid or whatever, it's actually going to be, and then it's not getting anywhere. That's actually a signal of strength and not weakness. So I just wanted to add that real quick. But as far as this footprint in the middle, the little three bars that we have highlighted, those
Yep.
are that was a stacked imbalance. It shows 3 levels in a row with I have it set for 300% or more of in.
All right.
And so it was like right after we broke down below that spot right there, which was like right near 96, I think it is. Yeah, should be near 96. Immediately after we broke down, we have this imbalance, and it often starts off or shows up as that strong of an imbalance because price doesn't even have a chance to transact in that spot because it's like a liquidation. We had stops right below the low, and they're getting triggered, and so it's just shooting price down. But then when we're not even able to go back up and fill that imbalance, though, this is a 5-minute footprint that's showing like a major amount of supply in the market. Because if there was demand right here, we would have swept those lows, we would have blasted right back up through it, and that we wouldn't even be talking about it. So that's like a really powerful signal, and it left that single print behind on the market profile at 96 as well. So we don't want to be fading that single print by going long into that. We want to be shorting against that. So we're shorting after this imbalance goes down, fails to go back up and break back above or fill it, and fill out the single print. And I also on the very far right, the third one, that's a 30-minute footprint. I highlighted the single print just so we could see it because that's kind of like the classic definition of the single print as the 30-minute. So we had the high of the next candle went up to like 82 or something like that, but it didn't. It wasn't able to fill the whole thing out. So that's like really heavy supply in the market and lots of buyers that are late or exiting. We might even have like new sellers of the big guys or even pushing on it to force them out. You know what I mean? Like they're market selling into it and all kinds of stuff's going on. Yeah.
Yeah, and if you guys haven't read my first episode on order flow and footprints, where I kind of focus on the single prints, it's in the education channel for order flow and footprints, and you can have a read of it there. But this is actually the last bar, the last chart on the right hand side is actually what I want to talk about a little bit more, Jester, because you're right. When you see a big player getting involved in the market where they sweep to fill, where they want in and they want in immediately. It does a couple of things. Firstly, it leaves its signature footprint, if you like, on the data. But secondly, what it does is it leaves an area of huge interest because, as I say in my educational episode, these people who have got enough shares to sweep in with hundreds of shares, sometimes a thousand contracts, immediately, and take the whole market down with them. When they've done that, they are in so aggressively that this whole area that Jess has highlighted, this whole box here, that is the area where they will defend their position aggressively. So if they see price begin to start to return up here, what you will find is they will be absorbing you. And it's something that you see all the damn time, is that these sweep spots are places where actually the bigger players have not just taken a position, they haven't just spent all their money buying those 1,000 contracts. They've left the rest of their money on the side so that when the other side, when the buyers try to get back up into that area, they're going to just absorb them. And they absorb them until they're done and they go back down again. Because they are defending their position. They haven't just got money like me and you to take a position. They've got money to take a position and then defend that position. And the sweep spot, that area that just is kind of shaded in, that's their territory. That's their bit. They're going to come for you if you try and take price back there. And you see that so often, isn't that right, Jester? Like we see that in the market a lot.
Yeah, it's all the time. It's probably one of the most highly defended areas. Actually, it's really powerful, like you said. Yeah, it's not like it just goes up there. Like sometimes I see people on like Twitter and everywhere, like, "Oh, we have this gap to fill." It's like, no, we have a gap to reject off of. Like, that's an extremely powerful area. You do not want to be going long into like they're loading up on sell orders into your longs when you go up in that area. They're not just going to let you fill that gap. You know what I mean? Like sometimes it will, but it usually won't though.
Very rarely, right? They'll only fill that gap after they're
Yeah.
done doing whatever they needed to do below.
Yeah.
Um,
It's rare. Exactly.
That's right. And so for me,
Very
on my footprint, just like Jester's highlighted there, I think Jester's manually highlighted it there. But on my footprint, I actually highlight it through Sierra charts, where the sweep area just continues forwards. It will continue forwards forevermore until it's retouched by price. And so if you guys aren't using that on your footprints, then that's one of the biggest takeaways from today for you from me is that sweep spots, single prints, they are areas of real interest, and you will find more often than not that price will prove that to you anyway. All right, so Jester, first and foremost, man, thank you so much for giving up the time today. Guys, you can see how calmly Jester's come onto the microphone and how brilliantly he's explained things. But Jester, this is the first time me and you are speaking, but actually I can see why your stuff is so good on Twitter and why you're so helpful in the community. Is actually because you've just got an eye for it. You just love it, but you've also got a real eye for detail.
I appreciate that. Thanks, man.
So I wanted everyone to really kind of like just pop in with their key takeaways. And I think it'll be good for Jester to know exactly just like what he's got churning in your heads, guys. So like for you, what are your key takeaways from today's session? Can you guys just pop some in that you think have made you think about something today that you're going to take away hopefully into the rest of the day or into next week? Liquidity zones, yes. Paper hands, I totally agree with you. Delta lines, I'm not sure what you mean by delta lines, but delta in itself, yeah, absolutely. Verify historical levels with order flow. Yeah, Robbie Vecchio, that's exactly what I do with my walnut levels. So if I'm giving you a walnut level, I've verified that with historic order flow. Delta for price absorption. Yep, absolutely. Paper, that's a big one. High value nodes and the footprints. What's delta? NWASH, you can Google that, bro. Pay attention to areas of initiation. What do you mean by that, Fig Jam? What would be an area of initiation for you? You mean an area of interest? I'm not sure what you mean. I know I sound dumb, just learning. NWASH, like I said, bro, there are no dumb questions. Just like to explain delta right now, we'd have to go backwards a couple of steps. And so we've kind of already been through that. So just Google what is delta on the footprint. You'll see it. Essentially, it's just the buyers take away the sellers and you figure out the difference between them. Finding areas of the sweep, like you said, stated. See if it's defended. Need to better understand on how to do that. P-Funk, yep, you can't do that in TradingView, bro. You're going to have to come and join the dark side on Sierra, where participants step in and absorb and then initiate. Yeah, absolutely, Fig Jam. Yeah, so they were the areas of balance that I was talking about, an intraday balance, not to be confused by larger time frame balance. But yeah, where price is kind of sticking around, I call that an area of balance. What are the buyers and sellers doing in that area? It kind of tells you where price discovery is going to go to next. Absolutely. All right, we'll give it a couple more minutes, man. But just last words to you, bro. Any closing words for everyone in terms of people trying to learn order flow and to kind of get their head around what we've discussed today?
Yeah, I would say before I answer that, I would say if you're P-Funk, you might not need to find areas of a sweep because you're P-Funk. No, I'm kidding. Yeah, by the way, I actually gave you a candlestick chart. I was going to touch on P-Funk's call yesterday. It's okay that you didn't add that. I know we're pressed for time, but
do you want me to add it now? I can look for
oh,
it.
sure. If you want to do it really quick while we're waiting on the questions.
Yeah, sure. Let me try and see if I can do that now.
It might have been the last one I sent you, actually. It has like a VWAP bands and a candlestick. It has like a 15-minute, a 5-minute.
So yeah, I've got one with the candlesticks. It's got two charts on it. Two charts with
Yeah,
is that the one?
exactly. Yeah, that should be it. Yeah.
All right, let me just yeah, I can get this up on the screen. Give me a couple of minutes. If you just want to keep the chat busy, and then I will come in with it when I've got a minute.
Yeah, let me hop back in the chat and I'll answer that. So yeah, as far as like using order flow, oh, thanks P Funk. Much love to you as well. You are the man. And Paper Hands, I hope you're feeling okay from last. And thank you, Bobber70. You're welcome. Wyckoff model from Bobber, exactly. Wyckoff model is really good. We got Fig Jam here. He's the man. See him on Twitter all the time. Let's see here. You're welcome, T Gans. And okay. Let's see. Yeah, so I would say when using order flow, one of the main things is use the key levels and key areas that you're already using, your support and resistance areas. And when price gets there, that's when you want to start getting a little more focused on the order flow. Like me and Pauli were saying, no man's land. Like if we have a key level up at 90 and then 120 points lower, it's at 70. We're not going to be like, overly fixated with every little tick on the DOM or footprint at like 80 in the middle. We're trying to look for some kind of a situation near 90 or 70. Like it goes down to 70, it starts basing right there, consolidating, and then it flushes the buyers out that are the weak hands, and then it pops back up, reclaims 70, and then you'll see on like a fast moving tick chart or the DOM, it'll start kind of stair stepping. Sometimes it'll go a little quicker, but oftentimes it'll stair step and start going. And I often like to get in on the turn of momentum right there, the shift. And sometimes you got to do a re-entry. Sometimes you get stopped out and sometimes you have to do a re-entry off of a break-even stop, or however you want to do it. You can just put it below the low if you want. It depends on the situation. If the sweep low is real far, I might just kind of use a really tight stop and kind of just keep it going right behind price up to break even. And then when it pops, I'll just hold it at break even and do a re-entry if it comes back. There's different ways to do it though.
So Jester, up on the screen now, I've got the candlestick charts. Looks like you've got the VWAP bands on there as well. Do you want to just talk through when you're ready?
Oh yeah, so yeah, this was kind of an interesting example. This wasn't cherry picked, as well, because this was literally yesterday's session. So if we look at the left chart, that's the 15-minute chart, and I know you're a big fan of the VWAP and VWAP bands, so I'll just touch on that really quick. Notice those really strong wicks below and above, right at those second standard deviation bands. We often see a lot of stuff like that actually. And then when it goes, after the Euro close, I think it was well after that actually. It was around 12:45 or 1, like consolidating right above that second band. And we didn't get the wick above like, we often will. We don't always. It just kind of like, it was up there just kind of like slowly chopping about. And there really wasn't that much strength, as you can see on the deltas. Like it was on the 5-minute one, you can see at 12:50, I think it is, it went up and it did like a little test real quick. And then it failed right there. And then it just, on the next candle, it's like the momentum started shifting and it just started selling, led to a massive sell-off. And there was a really great call by P Funk and Corey were talking about it. P Funk called the 60. He said, I'm looking for a shortener. We rejected right off of that, but then they were calling for 52, I think it was that they were saying, and see how we have that volume node? we have that low volume node, and it goes right into a really high volume right below 52 at 51. And so they were saying if we break down below 52, there's something to that. And sure enough, once we went below 52, it went up and like tested it really quickly over the course of a couple 5-minute candles, if I recall correctly. And then it just sold off like crazy. So that was like an extremely good entry. You know, break down, accept into that value, that high volume node, retest the high of the volume node, and then just sell off, you know. So a really good short entry off of the retest, the back test of that. Yep.
Yeah, that's a great example there. You know your volume profile with that low volume node on it. What time frame is that set to?
The one on the right is the 5-minute. The one on the left is the 15-minute, I believe.
Gotcha. Yeah. Okay, so it's the last 5 minutes of action. It's not visible range or anything like that. It's just the last 5 minutes and where volumes are.
Oh yeah, actually, I forgot to mention that. Thanks for mentioning that. See, I don't know if you can see it, but there's an orange line on the 15-minute chart, and it's right above VWAP right there. That's actually that's an anchored VWAP. The reason I did that is that's a fixed range volume profile. I wanted to only show the action up until that moment right before we broke down below 52, because I didn't want to show like how all that volume that happened after 52. So that actually is a fixed range volume profile. Forgot to add that. My bad. So yeah, that it goes up, and it's only going up to the last. I think it's the last candle that I'm showing on the 5-minute, maybe one more or something like that. So that on the right chart, that's showing like it's anchored from the open, the RTH open 9:30 up until like whatever time that was like 1 o'clock, a little bit after 1 o'clock, I think. Yeah.
Yeah, that's awesome, man. Thank you. No, that's really helpful. And is there anything to add on the chart on the right? There doesn't have to be. I think it's just a zoomed in version of what we're looking at above, right?
Yeah, it's just the 5-minute instead of the 15. Yep. So we can see like another thing is like we broke below. See how we were barely holding above that second standard deviation band on the right on the 5-minute?
Yeah.
And immediately, and then we get that candle that rejects above, and then it closes below right there. Yeah. I'm not saying you have to short there, but that's interesting how well that worked out. I mean, because we didn't get a wick above, but then we got another signal that was almost like a wick above, which is the close below, showing weakness above. You know, trapped buyers above, basically, which is what those wicks above show. Yeah.
Yeah, absolutely. There's just no interest above 4560.
Exactly.
All right, guys. Well, I've got like 5% left on my battery. I think this has been brilliant today. I really, really do. And even if you're an expert on these things, you know, I'm sure Barry, you'd agree because you're the expert in the room here as far as footprints are concerned. But it's such a good reminder, just going through stuff, and such a good lesson to learn all over again when you're kind of like reteaching it. So Jester, I hope in that way you found this useful too, bro. But thank you so much for your time, man. We really, really appreciate your participation in the community, but also just going out of your way on a Saturday to do this for a couple of hours. It's incredible. Thank you so much.
I love it. Thank you. You know, this was great. I enjoyed it. Thanks.
Wicked. Thank you, guys. Let's go and enjoy our Saturdays, man. Let's go. Thank you.